Okay, so picture this. You're an investor, right? We're days away from an election that could really shake things up.
Oh, yeah.
The bond market is going kind of crazy. Tech giants are pouring billions into AI. And you're probably thinking, what does all this mean for my portfolio? Well, that's
Exactly.
exactly what we're diving into today. So we've got company earnings reports,
Yep.
market analyses, expert opinions, straight from Bloomberg.
A whole stack of information.
Yeah, to help you navigate this
Wild market.
this crazy market.
Yeah.
We'll break it all down into
Yeah,
actionable
it will.
insights
That
that,
you can use.
yeah, you can actually use. Perfect. Now, I was reading that Google is using AI to write 25% of its new code.
That's a big one.
That's huge, right?
Yeah.
What kind of signal does that send to investors like us?
I think it's a massive signal that AI is not just hype.
Yeah.
It's becoming fundamental to how businesses operate.
Yeah.
Alphabet's cloud computing revenue is up 35%,
Wow.
largely driven by AI advancements. So for investors, this means looking for opportunities in companies that are leveraging AI.
Okay.
Think about, chip makers like NVIDIA,
Right.
who power a lot of this tech, or even Alphabet itself.
Yeah, their earnings just crushed expectations.
They did.
Yeah.
They crushed them.
That's a great point about looking beyond just the AI companies themselves.
Yeah.
Now, how does all this tie into the election jitters
Right.
and the bond market drama that's been happening?
Yeah, so the bond market is kind of like this giant mood ring for the economy.
Okay.
And right now, it's flashing uncertainty.
Oh, interesting.
The MOVE index, which measures bond market volatility, is at its highest since last October.
Wow.
Investors are nervous about potential policy changes depending on who wins the election.
Makes sense.
So this uncertainty pushes bond yields higher.
So higher yields mean potentially better returns for bond investors, right?
Exactly. If you're comfortable with some risk, rising bond yields can be a really good opportunity. But it's crucial to understand the bigger picture.
Okay.
Let's say we have a red sweep where the Republican candidate wins.
What would that mean for, like, my investments?
In the short term, a Republican win could actually be good for the stock market.
Okay.
Investors often perceive Republican policies as being more business-friendly.
Right.
So this could potentially lead to a stock market rally.
Okay. So good in the short term.
Yeah, but the long-term picture is less clear.
What are the long-term concerns?
Well, concerns revolve around how a Republican administration might handle the national debt, inflation, and trade policies.
Yeah, those are big ones.
Big unknowns that could spook the market down the line.
So there's a potential trade-off between short-term gains
Right.
and long-term uncertainty.
Precisely.
Okay.
Now, on the other hand, if we see a Harris victory, it could create a different set of dynamics.
How so?
A Harris presidency might be perceived as more growth-oriented,
Okay.
and that could potentially lead to even higher bond yields. As investors anticipate possible inflationary pressures from government spending,
Makes sense.
this could also impact alternative assets like gold or crypto,
Okay.
as investors seek investments that might perform better under higher inflation.
Okay, so no matter who wins, it sounds like we need to be prepared for some volatility.
Absolutely.
Yeah.
Diversification is key.
Okay.
Don't put all your eggs in one basket.
Right.
Spread your investments across different asset classes, sectors, and even geographic regions.
Makes sense. So we've got AI disrupting industries, the election adding uncertainty,
Yep.
and the bond market reacting to all of it.
Right.
What are some other trends investors should be watching?
Well, one interesting trend is in the pharmaceutical sector.
Okay.
Eli Lilly is doing incredibly well,
Yeah.
driven by their new obesity drug.
Right.
And this highlights the potential of companies tackling widespread health issues, so
Yeah.
creating investment opportunities.
Gotcha. What about consumer sentiment? Are people spending or holding back?
Reddit just released a strong holiday quarter forecast,
Okay.
suggesting that consumers are still spending.
So that's good.
This is good news for consumer-facing industries.
Yeah.
But we do need to be mindful of potential interest rate hikes
Right.
that could impact spending down the road.
So a mixed bag of positive signs
Yeah.
and potential headwinds.
Mm-hmm.
It's all about staying informed and adapting.
Exactly. Now let's zoom out to the global landscape.
Okay.
The Hong Kong Stock Exchange is opening an office in Riyadh, Saudi Arabia,
Interesting.
signaling growing financial ties between Asia and the Middle East.
That sounds interesting.
Mm-hmm.
What does this mean for everyday investors like us?
This creates new opportunities.
Okay.
Investors interested in emerging markets should consider diversifying their portfolios
Okay.
with investments in these regions.
Got it.
ETFs tracking Hong Kong or Saudi stocks could be a good way to gain exposure.
So even amidst all the uncertainty,
Yeah,
there are still opportunities for those willing to look beyond the headlines.
absolutely. The key is to stay informed, diversify your investments, and be prepared to adapt as the market changes.
Yeah, great advice.
Yeah, that's the smart approach. Now let's circle back to AI for a moment. Remember that statistic about Google using AI to write 25% of its code?
Yeah.
That's a game changer. It shows just how deeply AI is impacting businesses.
It's mind-blowing. And it's not just tech companies, right?
Right.
I feel like AI is popping up everywhere.
You're absolutely right. AI is making its way into healthcare, finance, manufacturing, you name it.
Yeah.
And we're still in the early stages of this AI wave.
So there's a lot of potential for growth in companies leading this AI revolution.
Exactly. Companies like NVIDIA, which make the chips powering a lot of these AI systems, are experiencing explosive growth.
Right.
And big players like Alphabet and Microsoft, who are integrating AI into their core products, are really well positioned for the long run.
Yeah.
It's all about identifying the companies that will thrive in this AI-powered future.
Yeah. So how can everyday investors like us tap into this AI boom?
Right.
Is it all about picking individual stocks?
Investing in individual stocks can be one approach. But remember, diversification is key.
Right.
You can also explore AI-focused ETFs that track the broader AI sector. This helps spread your risk across a basket of AI-related companies.
That's a good point about spreading risk.
Yeah.
Now, thinking back to the bond market volatility we discussed earlier, how can investors make sense of all the ups and downs?
Remember, the bond market is essentially reflecting investors' expectations about future interest rates and inflation.
Right.
And right now, with the election just days away, there's a lot of uncertainty around those factors.
So how can we prepare for potential market swings?
Volatility isn't always a bad thing. For informed investors who understand how to navigate these swings, it can create some really attractive opportunities. Having a solid investment strategy, being patient, and not panicking when the market gets bumpy are essential.
It's all about staying calm and sticking to your plan. Now, shifting gears a bit, you mentioned Eli Lilly's success with its new obesity drug.
Yes.
What does this tell us about the broader pharmaceutical industry?
Eli Lilly's win highlights the potential of companies addressing widespread health issues. The pharmaceutical sector, especially companies focusing on chronic conditions like obesity and diabetes, is poised for continued growth. These are global health challenges with massive market potential.
So for investors looking beyond tech and AI, pharmaceuticals could be a promising area to explore.
Indeed. Now let's talk about another crucial factor: consumer sentiment. Remember that strong holiday quarter forecast from Reddit? That indicates consumers are still spending, which is positive for consumer-facing businesses.
But we also need to consider those potential interest rate hikes
Absolutely.
that can impact spending down the line.
It's a delicate balance between optimism and caution. Staying informed and adaptable is key.
That's a theme that keeps coming up. Now, before we wrap up, I want to revisit that Hong Kong-Saudi connection. The Hong Kong Stock Exchange opening an office in Riyadh is a pretty big deal, right?
It's a significant development. It underscores the growing financial ties between Asia and the Middle East. And opens up exciting opportunities for investors looking to diversify their portfolios.
So beyond investing in U.S. markets, there's a whole world of possibilities out there.
Exactly. Emerging markets like those in Asia and the Middle East offer growth potential for investors willing to broaden their horizons. And ETFs can be a really useful tool for everyday investors to gain exposure to these markets. You can easily invest in ETFs that track specific markets like Hong Kong or Saudi Arabia. It's a simple and cost-effective way to diversify and tap into that emerging market growth.
It sounds like there's a lot to be excited about, even with all the uncertainty in the air.
Absolutely. The key is to approach investing with a balanced perspective. Stay informed, diversify your investments, and be open to exploring new opportunities both domestically and globally.
That's great advice. Now, as we head into the final stretch of this deep dive, let's bring it all back to our everyday investors. What are some of the key takeaways they should be thinking about?
First and foremost, don't underestimate the power of AI.
Yeah.
It's not just a buzzword, it's a fundamental shift impacting every aspect of our lives,
Right.
including investing.
Yeah.
Start thinking about how you can incorporate AI into your investment strategy,
Okay.
whether through individual stocks,
Yeah.
ETFs, or simply by learning more about the companies leading the AI revolution.
That's a great point. AI is here to stay, and
Yeah.
investors need to be ready for it. What else should we keep in mind?
Second, stay informed about the political landscape.
Right.
And how potential policy changes could impact your portfolio.
Right.
The upcoming election is a prime example of how politics can create both risks and opportunities in the markets.
So do your research. Understand the potential implications of different election outcomes.
Yeah.
And be prepared to adjust your investment strategy accordingly.
Exactly. Third, remember that diversification is your best friend.
Oh, yeah?
Don't put all your eggs in one basket.
Right.
Spread your risk across different asset classes,
Okay.
sectors, and geographic regions.
That way, even if one part of your portfolio takes a hit, other parts can help cushion the blow.
Right. And finally, and perhaps most importantly, don't let fear or uncertainty paralyze you. The markets will always have some level of unpredictability.
That's true.
But with a solid plan, a willingness to adapt, and by staying informed, you'll be well positioned to reach your financial goals.
Remember, knowledge is power.
It is.
So keep learning, exploring, and asking questions.
Absolutely.
The more you understand about the markets,
the
more confident you'll be in making those smart investment decisions.
For sure. Now, before we wrap up,
Yeah.
I wanted to touch on something you mentioned earlier. The potential for the U.S. deficit to explode over the next decade.
Right.
Regardless of who wins the election.
Yeah, that's a pretty big deal, right?
It is. It's a serious issue that could have major implications for the economy and the markets down the road.
Yeah.
You know, it might even be the biggest investment opportunity that no one's talking about.
What do you mean?
Well, what if instead of chasing the hottest stock or the trendiest sector, the real opportunity lies in understanding and preparing for the potential fallout of this massive debt? Think about it. How will this debt impact inflation, interest rates, the value of the dollar?
That's a really interesting perspective. It's not something you hear every day.
Exactly. It's about thinking beyond the immediate headlines.
Right.
And considering the long-term implications.
Okay.
So as you navigate this ever-changing financial landscape, keep that question in mind. How will the growing U.S. debt impact your investment decisions? What steps can you take to protect and grow your wealth in light of this challenge?
That's a great point to end on. It gives everyone something to think about as they plan their investments.
Absolutely.
We've covered a lot of ground today: AI, the election, market volatility, global trends.
It's a lot.
I hope this deep dive has been helpful for everyone listening.
I hope so too. It's been a pleasure diving into these topics with you.
Likewise.
Remember, stay informed, stay engaged, and most importantly, stay invested in your future.
We'll catch you next time on the Deep Dive